and welcome to India Market Open. It's been 4 straight weeks of gains. It could be a week of consolidation. Morning, Tamanna, but there's so much data. You've got India CPI, you've got US CPI, you've got global flows, and of course, 4 straight weeks of gains. But it still remains a buy on dips kind of market, right?
You know, this is what happens when you come off a long weekend of trade. The news flow is just enormous. So many things have happened over the last 3 days. It's really been busy, and you know, let's break it out for you one by one. We'll be talking about all the events which are going to impact trade today, and there's a host of them. Let me begin with what global markets look like, at least on Friday's close. It was a day of sell-off on Wall Street. Definitely the Nasdaq the most hit, down over 1%, thanks to Nvidia. So finally that Nvidia steamroller took a pause, and there was a drop over there in Nvidia stocks, 5% down. But remember, week on week it's still about 6% up, so it's just a pause over there. Jobs data came out on Friday, and that was important because US jobs in February have run hotter than expected at 275,000, way above estimates. Jan jobs data has also been revised upwards. So on the face of it, an economy that's growing too fast, bad news for rates. But on the other hand, unemployment rates have also gone up. Wage growth has been low. So unemployment at 3.9% was higher than what was expected. On the face of it, the Fed is on track to achieve what it wants, which is lowered inflation without impacting growth. So if you put those two together, the outlook could be positive. And that's what you're seeing as far as bonds are concerned. The US 10-year early this morning at least was at 4.05% on the back of this jobs outlook. So that's a positive. I want to pull up Asia. Asia has not had a great start to the morning, and we'll pull up all the indices. Look at the Nikkei, about 2.5% down. So following what's happening in Wall Street as well, Hang Seng at least up in the green. We'll quickly look at the Indian implied open and see what we're set up for, because there's so many factors at play today, and so far we're looking like we're up in the green and set for a good start to the day. But so many stories will play out, whether it's the Tata Group stocks, whether what's happening in banking and financials, insurance companies, all of that is going to be on the anvil. Just a quick look at what the fund flows were like at last close, which was Thursday for us, before I hand it to Samina for the trade setup of the day. And the figure I found interesting here is look at the FII buys. We haven't seen that robust a figure in a while for a single day, at about 7,300 crores for FIIs. DIs have also been buying, and what Amphi data, which came out over a Friday, is telling us that there is a rejig by mutual funds as well in the kind of companies they're buying, because of SEBI's push for you know, lowering their risk to small and mid-cap stocks. So all in all, that's at least the global piece of it, but we're set up for a decent day, Samina.
Indeed. In fact, we'll be playing catch-up, right? You had Thursday and Friday global cues to react to, and like Tamanna indicated, it's been a long weekend, so you're coming back to trade after a few days, and hence the euphoria and the excitement may actually continue. But just to add to Tamanna's point about FI activity, remember FPIs have made a comeback in the last 2 months. For the month of March, that number stands at 6,139 crores, following a 1,540 crore buy figure that we saw in the month of Feb. Jan is when we'd seen a massive outflow of FPIs to the tune of 25,743 crores. Beyond equities, FPIs have been aggressively buying in the debt market as well. That number stands at 1,025 crores for the month of March so far. But as we go into this week, a quick check of what implied Nifty is indicating too this morning. Global cues, like Tamanna indicated, are almost mixed, but it looks like we are setting ourselves up for a gap up opening. A 100-point open on implied Nifty is what we have as we gear up for trade. Lots of factors to watch. While a trade will be about specific sectors, sector rotation may continue in today's day of trade. But remember, 7th of March saw the markets close at a brand new high on the Nifty and the Sensex both. Markets were volatile, but nevertheless ended on a positive note for the 4th straight week. Similar trend is expected as we go into trade this week. The market continues to be a buy on dip, and that clearly is the strategy, not just for the benchmark, but for sector-specific trade as well. Well, if you look at option data, that indicates that 22,500 is expected to be a crucial level of support coming in for the Nifty. The next hurdle will be 22,700 and 22,400 and 22,000 on the downside are going to be important levels of trade. So 22,400 on the downside and 22,700 is going to be the trading range for this week as well. Well, you could see a week of some consolidation, minor profit booking cannot be ruled out, given that the last 4 weeks have been pretty solid and have been a northward journey for the index. Couple of data points that will give the market some direction. You've got inflation coming in from the US on the 12th of March, expected to be pretty similar to what we've seen over the last few months. You've also got inflation data coming in from India. Now, this is going to be critical because this is the last inflation reading before the RBI policy meets on the first week of April. Well, apart from that, from data that we've picked up, it seems like the broader markets are underperforming the benchmark. So what we've really seen is a small and the mid-cap space decline in last week's trade, and expectation indication that trade is now moving to the large cap space. So if you look at the bias is the next leg of rally will come in from some of those large cap names. Couple of IPOs, you've got 7 companies that will go out and raise money. You've got 5 listings as well that are lined up this week. So Tamanna, it's going to be a busy week, but what's interesting is after many, many months, it seems like the bias will now for a change and eventually move the large cap index. And we saw that last week while the Nifty did okay, the mid and the small cap index actually went home with pretty significant cuts.
Especially the small cap stocks definitely had significant cuts. And you know, Samina, this is right on course to what has been discussed on this channel right from the end of calendar year 2023, that rotationally that's going to happen. You also have policy push now in that direction. But speaking of large caps, at least one set of companies which are going to be under pressure today is Tata Group stocks and Tata Chemicals in particular. So I just want to start up with the sort of news flow we've seen over the weekend and what impact that's going to have. So now the Tata Chemicals story in itself is quite interesting. You will remember that this stock rallied about 34% just in the last 4 trading sessions. This was the close that you saw on Thursday, and I just want to pull up for the last 1 week if we could. Now, newspaper reports over the weekend, starting actually with the Times of India, reported that Tata Sons is looking for ways to avoid listing their IPO. Now, you know that they need to because of SEBI rules from 2021, which has said that they have to be categorized as an upper level NBFC. So they're supposed to list. The deadline for that is September 2025. There was a Spark Capital report which said that if they have to list, Tata Chemicals would be the best play. And that was all it took for that stock to spark massively. Now, these reports that suggest that Tata Sons might be looking at alternatives to this could really see some backslide or some sell-off in these counters. So that is one that I would look for. The reversal of the IPO outlook may see a sell-off. The other one to keep in mind is, of course, SBI, and we're going to try and have this conversation later in the day as well, because there's a Bernstein report out on India financials which has downgraded SBI to market perform with a target price of 780. Now, this is quite significant because it says they see less promising trajectory for public sector banks on weaker deposit growth and lower liquidity buffers versus private banks. Now, in a market which has been completely gung-ho about public sector banks versus private banks, this is a reversal of mood, no doubt about it. And we'll have to wait and see what the impact is, not just on the SBI counter, but on the PSB space as well. Another reason Bernstein gives is it says aggressive pricing and loans and deposit will result in muted earning growth. They say the valuation gap has narrowed significantly. Remember, what was going for public sector banks were their relatively lower valuations. Life insurance stocks are the other one. You had Feb data coming in. And now typically, yes, in Feb you might see good data because remember, before year end, anyone who wants to do the tax savings sometimes does use these instruments. So perhaps that's one of the reasons that you saw Feb revenues for life insurers surge 48%. LIC had the strongest year-on-year growth in new business premiums. SBI Life reported the highest revenue among private peers. There's a clutch of brokerage notes out this morning as well, which are underlying the positive sentiment. So look out for an LIC, an SBI Life, an ICICI Pru, and all of them could be seeing some upside. Just the thing to note about LIC is that their market share has fallen 520 basis points to 58.6%. They're still dominating, of course, but you're seeing a consistent slide in the behemoth's market share as well. SBI Life's revenues saw the strongest growth of about 30% on a year-to-date basis. So insurers, life insurers, public sector banks, Tata Group, especially Tata Chemicals, definitely on the radar. But there's so much more to cover, isn't there, Samina?
It is, and it's going to be another bad day, down day rather, for JM Financial. We'll take you through the latest updates that took place between Thursday and today will be the first day of a stock reaction coming in on JM Financial. SEBI has barred JM Financial from taking any new mandate for acting as a lead manager for any public issue of debt securities. This SEBI order comes after its investigation into a specific public issue of debt which was executed in 2023, where JM Financial was the lead manager and involved two other JM Financial entities, which is JM Financial Products and JM Financial Broker. SEBI has observed that these transactions involved all three JM Financial entities, so an arm's length distance was not seen in these transactions amongst the three entities. In fact, the moves were predetermined and done in a synchronized manner with unnaturally high retail subscription. That is what is going to put JM Financial back in focus this morning on back of being barred to be the lead manager of any of those NCDs going ahead. The stock will be reacting negatively. Of course, JM Financial has said that they're cooperating as and when they've been required to do so. Well, moving on from there, another company that will be in focus, Interglobe Aviation. Watch out for this one. The co-founder Rakesh Agarwal is reportedly considering doing another round of stake sale. There were reports in the early part of the weekend where this quantum of stake sale was about 3.3%, but there are some reports this morning that indicate that the stake sale could be to the tune of 5.8%. This stake sale will raise about 6,600 crores, the floor price set at 2,925 rupees a share. Well, this is part of the Rakesh Agarwal strategy where he has been gradually offloading or reducing his stake in Interglobe Aviation. Well, another one to watch out for is going to be Rail Vikas Nigam. This is actually a fairly big one. They've secured an order worth 1,298 crores from the Himachal State Electricity Board. The stock went home flat, but the counter could see a big reaction because this order win is a significant one in terms of its order book. So those are the three on my list, but I guess the list continues, Tamanna.
Yeah, and RVNL actually is going to be a hot one today because they have one, as you said, from the Himachal State Electricity Board and the other one from the Madhya Pradesh Metro Corporation as well. But just a word on JM Financial. I mean, that stock was actually in recovery mode on Thursday's trade, up 3%, with the idea that, you know, that whole fear was overblown. Now comes this sledgehammer on, they've been banned or barred from, you know, NCDs as well in that part of the business. What is going to be the spillover effect really is the question, and we're going to be discussing that more on Editor's Cut, but one to watch out for. Just a couple of stocks. I want to talk about the real estate pack. And Samina, this is a story that you're going to be detailing, but exciting. REITs now in small and medium section of real estate have also now been allowed. So that's a 50 crore sort of a pack. The minimum investment has also come down. Is this going to be a good investment or not is the question. So I would watch out for real estate stocks, definitely. DB Realty is another one. We reported that they will be raising up to 1,500 crores versus a QIP with a green shoe option of 500 crores. The issue price is 258 a piece. So DB Realty, another one that should be on your radar. And HG Infra is the other one. Actually, a whole host of them in terms of order wins, and we'll get Anushi to give you those details later on the show. But HG Infra one that I want to put out there for you. They've been declared as the lowest bidder for 945 crores on an NHAI contract for a highway construction project in Andhra Pradesh.